You're listening to AI Prism from Seoul Economic Daily.
The Korean won just posted its sharpest monthly gain since the financial crisis, up 8.8% in a single month. That surge came right after the US and Japan carried out their first joint yen intervention since 1998. At the same time, China's semiconductor output has jumped 350% over the past decade, and it's starting to eat into the market Samsung and SK Hynix depend on. Samsung Electromechanics, meanwhile, is fast-tracking a Philippine plant to keep up with runaway demand for AI components. Four moving parts, one question: what do they mean for your Korea book? It's Monday, August 3rd. Here's why global investors are paying attention to Korea today. The moves are connected by a single thread. Currency and capital flows are repricing faster than fundamentals can catch up. The yen's slide to a 1986 low near 163.9 per dollar forced Tokyo and Washington into coordinated buying, dragging the won up alongside it through won-yen correlation and SK Hynix's ADR conversion flows. At the same time, Korea's semiconductor sector is facing a structural challenge from Chinese capacity growth, even as its own exporters post record numbers. Here's what the numbers show. The won gained 8.8% against the dollar in July, the sharpest monthly move since March 2009, pulling the exchange rate down 125.4 won to 1,424.0 won per dollar, or about $1 to 1,424 won. The Bank of Japan and Ministry of Finance intervened on July 30th, selling dollars and buying yen after the yen touched 163.9 per dollar. The New York Fed followed on behalf of the U.S. Treasury, and combined intervention pulled the dollar-yen rate back to around 157. China's integrated circuit output hit 484.28 billion units last year, up nearly 350% from 108.72 billion units in 2015, with China responsible for 72% of the world's added mature node capacity since then. Samsung Electromechanics signed long-term supply agreements with more than 10 hyperscalers and moved up production at its Philippine MLCC plant to as early as the first quarter of next year. Korea's own exports hit $98.89 billion in July, the second highest monthly total on record, with semiconductor exports topping $40 billion for a second straight month. Two currents, one market. Capital is flowing toward Korea on currency and export strength, even as competitive pressure builds in the chip supply chain. So what does this mean for global investors watching Korea? Earlier, we said the won's 8.8% monthly surge was the sharpest since the financial crisis. Here's what that actually means for you. A stronger won lifts dollar returns on Korean equities and bonds, but it also raises hedging costs if you're running unhedged local exposure. The yen intervention adds a second layer of risk. If yen carry positions unwind sharply, Korean markets could see the kind of volatility that hit global markets in 2024. On the industrial side, China's chip capacity growth is a multi-year overhang for Samsung and SK Hynix's margins, even as near-term AI-driven demand, visible in Samsung Electromechanics expansion, keeps propping up Korean tech earnings. Whether Korea and Japan's finance authorities intervene again around August 3rd, particularly if dollar-yen approaches 155. The Bank of Japan's September policy meeting, where a further rate hike could narrow the U.S.-Japan rate gap, driving currency swings. Samsung Electromechanics' third-quarter earnings call for confirmation that AI server MLCC sales are climbing toward the projected 20% revenue share. That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WAN IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.